Welcome, fam. Welcome, fam. It's your boy, and I'm back. Welcome to the F Works Experience. I'm your man, Don Mega. If you know me, you know me. If you don't, that is okay too. This podcast is about the F factors, six powerful principles that I believe govern our lives and also give us purpose. Those six factors are faith, family, finances, fitness, friends, and fear. Each week, I'll dive into one of those F words and see the impact on our lives, our mental health, and our well being. This week's word happens to be finances. I am practicing this thing called the aggregate marginal gains principle. It's where you apply and do 1% better at something to improve yourself drastically, transformationally throughout a 1 year process. So follow me as I go through these six factors and improve each one on a daily basis for a full year and see what my results are. I hope they are phenomenal. So let's go for the ride. Today's F word of the day is finances. We'll discuss finances today on a different level. We're going to discuss the thing that matters when it comes to how our lives are governed in this country, the good and bad of it, and that's credit. I have been an entrepreneur for 20 years plus. I have established businesses from S Corps to LLCs to nonprofits. I'm also pretty skilled at having pretty good credit for a very long time. I have learned how banks operate, how they move, what credit bureaus they pull. I have learned how to do business credit with Paydex. My Paydex business score is like 85 or 90. My personal credit is 800 or so. I don't call myself an expert. I am experienced at using credit. I have an enormous amount of credit available to use at any point, personal and business. But the deal is that it's just money you can borrow. We all need to know how the credit game works and how credit in this country works so we can get ourselves in our best position possible to improve our business and our financial lives. So without further ado, let's dive into. All right, credit. Credit in the U.S. is everything. And I want to give you guys a brief synopsis of what credit is and how it works in this country and the importance of it. So we'll cover the importance of good credit. We'll cover differences in personal credit and business credit. We'll cover 3 myths about credit, and I'll show you 3 things we all should know about credit. Okay? Again, I'm not a credit guru. I'm a credit experienced individual. Okay? As we dive into this, let's first go. The importance of credit. Believe it or not, employers are using your credit to establish if you are worthy of getting a job these days. Good credit is super important to getting a job these days. Credit is. And not only is it important in getting a job for prospective employees by employers, they're also monitoring your credit once you get jobs at certain places. Law enforcement, financial services, military. They will watch your credit report and monitor your report to make sure your credit stays good as a requirement for your job. So if you are in the business of certain jobs you want to have, understanding they may also require you to have good credit to have that job. Another thing about credit, there are accounts for credit you can get that do you absolutely no good. No good at all, but will kill your credit. Those things are the normal, basic essentials we need every day, but yet we don't know how important they are to our credit score. Gas bill, cell phone, landline, AT&T, Verizon, all those guys, right? Who else we have? Light bills. Those bills are crazy important to your credit because if you do not pay that $27 cable bill you forgot to pay from a year ago, and it goes to collections, and it hits your credit report, it is a long time coming to recover that credit. And it's tough to do that thing too. So please take care of your bills that you have to pay to actually operate in life. Figure out a way to pay them before they get the collection, because they can never help your credit score. They can only hurt you. Another thing that credit is important for: insurance. If you have bad credit, you will not be able to get low insurance rates for home insurance or for car insurance. It's crazy high if you don't have the proper credit. So those things are essentials for all of us. Again, your light bill, phone bill, cell phone bill, all those things will impact your credit if you do not pay them. And your good credit or bad credit will determine if you pay high or low amount of car insurance or homeowners insurance. And your credit could determine if you get a job or keep a job. That is the importance of credit alone. All right, next up, conversation will be about the differences in personal and business credit. This is important. Your ability to pay your bills on time reflects on your social security number. There are normally 5 factors that determine your credit score. And those factors are payment history, credit utilization, length of history of your credit, mixed credit, meaning like having installment loan and a revolving loan, and inquiries, which all those 5 factors are a part of your credit. The first 3 are the big one. Payment history is colossal. Your ability to not be late ever is huge. I'll give you guys a story. Recently, I had an issue with one of my banks, reported my credit as late one time. Now, I've never been late on credit, in the last 20 plus years. I'm like, now, my score dropped a full 90 points behind one late pay. It went from a 836 to a 745 because of one late pay, which is crazy. And I'm talking about, I have an extensive credit file. My file is pretty deep. So to have that impact on my credit, it would ruin most people's credit with one late pay. It was $21 payment. It's fixed. It wasn't on me, it was on them, but it's fixed, and but it's taken care of. Now, I want to also address one of the most unknown things about credit. It's important for you guys to know that your real credit score, or the score that is used by 95% of all institutions and lenders, is not your Credit Karma score. I'll say it again. Your Credit Karma score is not your real credit score. I'll break it down for you. The score that's used by 95% of all lenders is a FICO score, a Fair Isaac Corporation score. It was created by guys named Bill Fair and Earl Isaac, which created the Fair Isaac Corporation and started using credit and using their score in 1985 or 86, I believe it was. And that is their score that 95% of all banks, 95% of all lenders use. It is a Fair Isaac credit score. The Vantage score was created by the 3 bureaus together: Experian, Equifax, and TransUnion. Those are your 3 personal bureaus, the 3 major personal reporting agencies. They came together and created their own score, which didn't really take off. So most companies don't even use that score at all. I mean, no one does. If you look online, and you can call your bank or call the lender you're trying to deal with, normally they'll tell you what score they pull, and it's not going to be a Vantage score. So, and the numbers on your Vantage score sometimes are a lot higher than your real score, sometimes a lot lower. So your Credit Karma score is not your real credit score. It is not the score being used by the banks. It is not the score being used by the lenders. It is not the score being used by almost anyone. That's just a score for you to see. You have to go to myfico.com or order your FICO score and get your real score. Now, I will give you a caveat. Experian.com does give you a free FICO score once you sign up. You can see your score there. So if your credit files are all identically the same across the board, from Experian to Equifax to TransUnion, Whatever your score is on the Experian website, on that FICO score, is most likely the same score on the other bureaus as well. Do not believe your Credit Karma score is your score, because it is not. Don't go to the bank and say, man, I got a 700. They're like, bro, your credit is 650. But what this say? It ain't the real score. Now, believe it or not, 1 out of every 4 credit files, there's an error on the file, a major error on the file. That means 25% of people have a problem they may not be aware of on their credit bureau that can really affect their score. So I advise you all to please go out and check your credit and make sure everything is absolutely correct, down to the last dollar you owe, to when the account was opened, to who you owe money to. All those things are likely to be right or wrong, and if they are wrong, they can be removed for that case all by itself. So, quick follow-up again. Your Social Security number is your identity to your credit worthiness. There are 5 factors in credit: your payment history, credit utilization, your length of credit, credit mix, and your inquiries. There are 3 bureaus. The main ones are Experian, Equifax, and TransUnion. Those are the ones that are used the most. And your score, your best score to use, is not a FICO score, what they call the ones on Credit Karma. It's a FICO, Fair Isaac Corporation, Bill Fair, Earl Isaac. All right, moving forward to business credit. Your business credit is just like your personal, it's just a bit different. Your business credit is not linked to your Social Security number, it is linked to your EIN number, Employee Identification Number, which is a free number you can get by going to irs.gov and filling out a form for your EIN number. I've seen countless people pay for an EIN number when it is literally free. So go to irs.gov and put in EIN number. As a link come up, you fill the information out online and you get it immediately. Put your company's name in there, and that 9-digit number is the number you use when you do credit. Now, the factors for credit is the same for the personal. Your payment history to vendors, loans you pay it back, those things are the same established to help build credit for you on the business side. A little different though. Most businesses will give you a credit of a small amount till you earn it. It's called like a net 30 or net 90, which means you have 90 days to pay it back or 30 days to pay it back. If you go to a Uline or a Granger and they give you a net 30 and give you a credit line for $200, if you spend $200, they expect you to pay that back in 30 days or make a payment on that, which is whatever the required payment is, in 30 days. It can go up to net 90 or net 120, whatever it is. If they give you net 90, you can pay it in 90 days. That's fine. But pay it within the allotted amount of time so your credit stays well enough to get more credit. That is the goal. Remember, credit only allows you opportunity to borrow money at a lower rate to do more things with, to invest with. That's why you want to have good credit to make good moves and help level up your game. Okay, so, and the score they have for business normally is a couple scores, but the main one for business is by Dun & Bradstreet, and they have what they call a paydex score. The paydex score is a number you use when it comes to determining credit. Now, I will go further and tell you the collaboration, the effect of how your personal credit and your business credit can be affected together. Okay, your personal credit is used when you start off businesses. They allow you to use your personal credit to fund a lot of things with businesses. Banks will give you yeses and nos based on your personal credit because you don't have a business credit established yet. But they make you do one thing also, it's called a personal guarantee, which says this: you want to borrow $1,000 from me? I'll give it to you. But I need you to personally guarantee that if your business, ABC company, don't pay it back, that you, John Smith, will. Will you agree to that? And if you agree to that, that's called a personal guarantee. So a personal guarantee is when a company loans you money based on the fact that you will guarantee to pay it back, even if your company cannot. If your credit is not the greatest and you are lucky enough to get approved for a business loan or a line of credit or a credit card, chances are you get a higher interest rate. And that is huge. Interest rates are a huge difference. People overlook them all the time, but it compounds on you. I'll give you an example of two crazy interest rates that you think will not be a big deal. First example is this. Let's say you buy a car for $20,000, which is a pretty affordable car, and you get a great rate, which is not even possible these days. Let's say a 5% rate. At 5% rate, I think you will pay about over a 5-year period, or what's that, 5 years, 60 payments. You should pay about $22,000 overall for that car, right? $20,000 is the price for the car. That's TT&L. Give me a number. And your interest be about $2,000 something on that car over the remaining 5 years. And they made $2,000 some change on you over that vehicle over the 5-year period. Let's flip that. The same $20,000 car, total price, walk out the door, TT&L the whole nine. And you got 15% interest, which is not even the worst you can get. Some guys paying 25 and 22. I think it's the highest 22, 25. But say you get 15% interest. The same car, the same thing. You now pay over the 5-year period $27,000 and some change. $5,000 more than you would at 5%. That is not counting your insurance rate being higher because, again, your credit is lower than a person with the 5% rate. So it is super important to understand how your credit works and how to manage your credit. Another crazy example, let's say you're buying a house. You're buying a house for $300,000. This is a modest home in the U.S., man. In Texas, that's a decent house, right? $300,000. It's a nice, decent house. 2,000 square foot home, 2-car garage, front yard, backyard, nice house. Let's say you're buying that house for $300,000 over 30 years at 6%, which is a really, really good rate. You will pay overall about $647,000 at the end of that 30-year period for that home. So $300,000 originally, now it's $647,000, and that's at 6% rate. That's a lot. And the way houses are done, that's how it is. That you got cash. They put the first 10 years of payments go toward interest alone. 9% interest, you paying very little on your principal in the first 10 years of a house. If you buy a house for $300,000, the first 10 years of that payment most likely will go toward interest. That means if you got an $1,800 a month note, that means $1,700 going towards your interest and $100 going towards your principal. So you only pay down $100 that first month of your house for the first 10 years. It's a crazy way of how you buy property in the U.S. Now, that same house, $300,000 home that you love so much, at a mere 8% interest over 30 years, you will pay $792,000 for that home. That's an additional $147,000 over the 30-year period on a home just because your interest rate is up 2 points. And that's really another low rate. Most guys getting 10%, which is crazy. So this is why I'm saying you guys have to get in control of your credit. Know your credit inside and out. Improve your credit. Make it better for yourself because it is crucial to improving your lives and helping you build generational wealth and pass it on to your kids. All right. I want to cover 3 myths about credit real fast outside of that dang Credit Karma thing. Number 1 myth is this: checking your credit will hurt you. It doesn't. If you check your credit, it won't hurt you at all. Check it all you want. It's called a soft inquiry. No one sees it besides you. However, If you have someone else pull it for you, that's no longer a soft inquiry. That's a hard inquiry. Most of them. And if they do a hard inquiry, I'll give example again. It's for a car. You go to a dealership and they tell them, I got a bank for you. I got a guy who'll take care of you without a problem. They go in that office and run your credit 5, 6, 7, 8, 9, 10 times until somebody says, hey, I'll take it. And they put 10 inquiries on your credit score. You started with a 630. When they're done, you're at a 615 at best. And that one day hit instantly. Score drops instantly. Don't fall for it. If you're going to buy a car, be smart. Find you a lender and go get financed before you go to a dealership. And that way, it's the best way to do it. And know which of your 3 bureaus is the best. If you know you have a better Experian, you can go to banks that pull Experian. If you know you have a better Equifax, go to banks that pull Equifax. And the same so on with TransUnion. I'll give you a quick tip. If you're looking for TransUnion, Navy Federal pull TransUnion most times, mostly all the time. U.S. Bank pulls TransUnion. Most credit unions in the U.S. pull Equifax. American Express pulls Experian. Chase pulls Experian. Some pull 2 bureaus. But make sure before you go to a dealership, you get approved first to save you a bunch of money and time and get the best rate. Because even when a dealership gets you for, say, 6% or 8%, they add a quarter of a point or a point on top. If a dealership says, hey, I'll get you financed, and they go to the bank, and they reach out to Chase Bank, and Chase offers you an 8% rate, they may charge you 9% rate. Go to the bank yourself first and get approved before going and buy a car. It's my advice. It's cheaper, way better for you that way. Please do that. Second myth, carrying a balance on your credit cards is not a bad thing. It boosts your credit score. It does not. That's backwards. How in the hell do you having money on your card being used boost your score? It doesn't help that way at all. I would suggest carry a $5 limit, $10. Use the card for gas. Let it hit your credit report and pay it off next month. It's utilization. You don't have to be major amounts of money, just get it used more often. And typically, you'd be great. So carrying major balances will not help you. Last but not least, business and credit are completely separate. Not true again. I just told you guys earlier, business credit cards, most banks will rely on your personal credit when getting you a business credit card. Even though you give them your EIN number, you'll have to personal guarantee for yourself, you'll take care of that balance. So they're not separate. Now, what you should do is learn to separate them as much as possible. You should have a different bank account for your business than you do for your personal. If you bank at Chase or anywhere else, walk into the bank and apply and open up a business account in that name. If it's the DBA or LLC or S Corp, make sure it's separate. Pay your bills for that business out of that business account. If it's just transferring it from your personal to your business account and then paying it, that is the best way to do that. You will not pierce what they call the corporate veil. That they can, if you're using your business account for personal gains, the IRS can't come after you for doing so if you're filing taxes separately. So it's best to keep them separate as best you can. Open a business account as well as personal account and operate and pay your bills separately if you can do that. It's very important to know a few things. When you're trying to improve your credit, people are very impatient. I'm sorry to say, but it's a slow game. It can bounce real fast. It can jump real fast, but it's normally a slow game. If you have people you trust who trust you, ask them to put you on their credit card. Become an authorized user. That is probably the fastest way to become credit worthy. Now, you should have at least 5 accounts on your credit bureau to be considered credit worthy by FICO. You can't have just 2 or 3, you need 5 accounts. And I'll give you some tips on where to go get easy accounts to help build your credit. Number one, Credit Strong is an amazing one. Credit Strong, you can do personal or business. You can do revolving accounts and or installment accounts. If you don't have an installment account, I know what it is. This is what it is. Installment accounts is when you get a loan from a bank for some reason to pay something off, and you pay that loan down incrementally every month. And once it's done, it's done. A credit card is revolving. The money can be used over and over again. Installment, it cannot. Buying a car is an installment loan. Buying a house is an installment loan. Getting a personal loan for $10,000 paying it back every month is an installment loan. You need that on your credit bureau. That is a part of the mix you need for your credit. And Credit Strong, it offers you an installment possibility for like 10 to 12 bucks a month. It's based on helping you build your credit. That's why they're there. Reach out to it. It's a phenomenal site, creditstrong.com. Another one is Kickoff. I'm not as familiar with that one, but my boy has this on his credit. It works well for him. But I do not know all of their products, but Credit Strong is my number one. If you need more advice on how to improve your credit and watch somebody walk through the process and do the reading and the research, go to creditboards.com. Creditboards.com is an awesome site. I've used it for over a decade to help improve my credit and keep me on the right path when it comes to my credit. They tell you the banks they use, and they have a system they call a credit pooled database. It helps you find what banks pull what credit bureau in your area. For instance, if you live in Houston or live in Texas, it's different than what they pull in, say, California. So learn what banks pull which one, and even nowadays, you can Google it. Most banks will tell you if you ask them. Call your banker and say, who do you guys pull for credit? They'll tell you, normally Equifax, TransUnion, Experian. Another quick tip, if you're applying for credit, if you can, I know it's free with Equifax, and I think it's also free with TransUnion. I think you got to pay for it with Experian, but lock your credit. If you're not pulling from that bureau, lock your credit before you start shopping for credit cards. You don't want people to pull 2 and 3 credit inquiries for one product. And I tell you the one who I would say never go to. Never, ever go to Capital One to get a credit card. Capital One pulls all 3 bureaus to get one credit card, and they're a subprime bank. They pull all 3 bureaus, Experian, Equifax, and TransUnion, just for one credit card. Now, with those same 3 hard inquiries, you can go to American Express, Navy Federal, and Citibank and get possibility of 3 credit cards for the price of that one for the same 3 inquiries. So I would never recommend using Capital One for any banking or credit card purposes at all. So those are the gems I have for you guys today. I will do another podcast later on how to start a business, from forming an LLC, getting the EIN number, and whatever state you were in, from Texas to California, and help you guys with that part of it. But I wanted to address credit today. I want you guys to understand how important it is. It's the beginning of the year. We can all focus on getting our credit better and improving our credit. If you put time and energy into credit as we do most things like social media, if we put the same hour on credit a day or even a week, your credit will be so much better at the end of the year. Like, you can clean things up. I guarantee you, half the people who listen to this podcast has something on their credit that is wrong. I guarantee it. We just don't check enough to clean it up. And they just passed the law, matter of fact, last week, or was it this week, that says that any medical thing on your credit should no longer be there. So if you have medical things on your credit, like hospital visits or ER visits that you didn't pay, they should now be removed or can be removed because they're now illegal to have on your credit. Hey, listen, people, take care of your credit. It is crucial to how you survive and how you pass on your houses, your children, and your grandchildren. A lot of us are in the same boat because we're stuck because credit is holding us back. You have abilities to spend $10,000 to $20,000 on a product or invest in certain things that you know can help change your life if you had the money. All you have to do is focus on improving your credit, and you can get the money. The one thing I love about credit is it does not discriminate. If you look online, your name does not matter. Your color, your race, your religion, those things don't matter. Credit is as close to being fair as we get. And when you know how to use it, it can change your life. So, that being said, I appreciate you guys joining me again for today's lesson slash podcast about what I know. I hope I help somebody out. Any questions, DM me if you have to. I can help out if I can. In the meantime, love on your family. Take care of your finances. Improve your credit. Please level up your fitness. Take care of your health and wealth. That is as important as anything else.